The year is 1987 and the month is October. We just suffered the worst crash of all time, the Black Monday. The question is, could something like this happen in 2023? Well, there are some stats that are looking eerily similar. Hello, ladies and gentlemen, and welcome back to The Daily Show, where we discuss stocks, commodities, and cryptos together. Today, we talk about the sell signs that people are looking at in the markets. Do we need to be paying attention to them, or should we be focused on the bullish side? With 1, 2, 3, 4 days down, markets are starting to get a little bit oversold. But with Russell 2000 showing us the way possibly is down moving forward and semiconductors coming to an important level, we've got to focus on market breadth. And meanwhile, it's not looking very good. Well, welcome back, everybody, to the special weekend edition of the Markets Around the World. We discuss macro, lead indicators, and the hottest charts together. If you like anything to do with markets, remember to subscribe, smash that alert button, and join us for the Monday Open. It's going to be a wild week. So we know that there were trillions of dollars options expiring, but this is what Friday looked like. It was a sell-off across the board as we saw many options close directly into the morning, moving maximum pain right down to almost levels where it actually closed at the end of the week. More on that later on, but let's discuss Tesla, down almost 16% for the week, while Netflix earnings were showing us a little bit more green. It seems to be a decent earnings season, but not amazing, and concerns around the world are starting to put pressure on the best sector in the markets, being semiconductors. Let's have a look at the eerily and possibly spookily similar times in 1987 to where we are now. Now, of course, these are most likely just interesting history tidbits, but you can see here the NASDAQ versus the Dow in 1987, where we are now and what happened next. Now, I had a look and dig through some of the data for the worst months of the year, but more importantly, the worst flash crashes. And it turns out 3 of them are actually in October. There was Black Monday, which is obviously October 19th, 1987. And then there were 2 others focused on the end of October. Now, not to say they're going to happen, but of course, some interesting stats nonetheless. Let's talk about the reality of where we faced or what we are faced with in the markets right now. Russell 2000 is showing us something that's very strange about this market. The cumulative AD line, that is basically how we're seeing the advanced decline of stocks, is starting to look exactly similar to what we saw before 2008, 2009. The only other period it ever happened was the 1999 to 2000 bubble. And in both situations, when the Russell 2000 did so badly, we led into a pretty tough time for markets. Will it be the same? Well, let's have a look at some interesting things here. Of course, yields continue to be a problem. Have a look at the UK 30-year yields, a new high, and this actually marks the highest point since 1998 for UK 30-year yields. Meanwhile, I was having a look over on Twitter X, and I saw this chart here from Holger, and it's just phenomenally weird. Greece 10-year yields are paying less now than US 10-year yields. Yes, you heard that right. Greece 10-year yields are paying less than US 10-year yields. I remember back in the past when you would have thought that is absolutely impossible. And the reason I want to bring it into this special weekend edition of the videos is because you have to expect things that are absolutely obscene in markets sometimes that you may not think are possible at all. So what are the actual odds that we focused on a 1987 style crash? Well, of course, it's 1 in 5, I believe, over the next 20 to 30 years we could suffer such a crash. So I wouldn't worry too much about it. But what I would say is that it is very imperative that we think about these risks always in markets. With the rise of zero DTEs and, of course, everybody starting to own stocks, take a look at this chart. 58% of all American households now hold stocks in their account, much more than it was back in 1987. The reality becomes clear that something weird could happen at any time, and of course it would actually affect most of us out there. US IG Corp Index is also showing us some weird similarities with certain other periods. Now you'll notice here that we actually had a difference in yield versus spread on bonds, and you can see the difference here lasted for quite some time, leading into a very serious situation. something we will be looking at, because when we get these types of spread differentials, there is usually something wrong in the economy, and we'll focus on that moving forward, so make sure to subscribe and smash that like button. Before we get into the charts, before we get into the statistics of what most likely is going to happen for the next couple of weeks, I want to talk about earnings season, because this week is massive. Why is it huge? Well, we know it's all about big tech. Microsoft comes out Tuesday after the close. Then we've got Amazon, we've got Meta, and obviously many, many others coming through. This is the week where we see what technology has really done and what it's going to do moving forward. And of course, with most of the stocks realistically, or most of the stock market realistically being the Magnificent Seven, there are a lot of things to be wanting to watch out for. Take a look at Meta. Historically, maybe not this much volatility in the options. Have a look at this. It's a plus minus 8% overall. So we have a plus minus 8% move. We've got Google with a plus minus 6. So remember, as you're a trader or an investor, you're looking at some pretty large moves coming through these earnings seasons. What about direction? Well, what do the retail traders think? I'm very interested in seeing this week's report on this. And of course, we'll update you when it happens. But everyone's split 1/3 of the way. 1/3 are bullish, 1/3 are neutral and have no idea what's going on, and 1/3 are bearish. So what a perfect time to confuse everyone. Well, bullish percent index, which is something we're focused on in terms of the rally, hasn't made a new low yet, but it's starting to look a little bit negative. For bulls to come around, this is around the right area that they need to do it. According to recent pre-election years, we bottom on October 19th, which is just gone, and literally showing us again that we tend to lead into a fairly decent November and December rally. Will that happen again this year? Well, the odds are that we continue a little bit of chop, and actually while we might bottom around this period in time, we tend to chop all the way till mid-November. Let's have a look at a couple of other stats here. Here's what tends to happen. You can see pre-election years have a slightly different bottoming period. Sometimes it leads into the next week, which seems to be what is happening right now. But this is the week that will really define, I think, the market from a potential November to December rally, or just a really, really bad time where everything's starting to look really bad across the board. We've got some updates here as well. When we've had January to October positives and August to October is negative, it turns out that the stats start to change a little bit. Instead of just a 100% win rate, we tend to see a 15 win, 3 loss type of scenario. So, well, will we get a bullish end to the year? The stats are still in your favor, but they're getting worse than they were only a week ago. And that's thanks to really what happened during this maximum pain week. Pre-election years, November since 1950, you can see November tends to be still a positive month. And I want to bring this chart up because, of course, gold has been the diamond, or the gold in the rough, I guess, in this case, with that huge short squeeze that we've started to see. And we had that a week ago. Gold put on some massive trades over the last week. And we know it leads into usually a multi-month trade, which can go upwards of around 30% in move. Previous times we've seen this 30, 32%, and 26% gains. Let's take a look at the under the hood. What big transactions were going through this week? There was a huge late print on the Russell 2000, which probably was a mixture of sell going through because, of course, it happened during the session and then it posted as a late print or a late kind of advice to us that it had happened. That was a massive trade going through the Russell again near the lows. We saw the bear funds. This is the Direxon Daily S&P 500 Bear Fund 3X. That actually showed us resistance. So we basically saw a possible take profit on bearish moves, which makes sense based on where we are in the markets. And we'll look at the structure very, very soon. And then we had some other things here, such as United States Oil Fund posting a big trade last week and so far turning around. We've speculated that we may have just seen the high in oil. And although that is not popular opinion, we'll take a look at the charts on how to figure it out later on. We also question what's going on with Google. One of the biggest trades of the year went through. Since that point, negative 3% or $3 lower on Google. So some large moves starting to come off some of these big sells or potentially sells at these highs. Let's have a look at the Friday options expiration, and maximum pain did not come through, but it kind of did. If you actually looked at maximum pain, maybe this is a good little word of warning with it. In the morning open, you would have noticed it dropped significantly. Tons of options were basically closed, and we saw a huge change in maximum pain. I think it dropped something like 9 points in the morning, which is massive for the SPY, and it came straight back down. So it actually closed closer to where everybody was making a lot of money when it comes to the options. Let's also have a look at these unusual activities, because there were almost 47 million options opened, 51% puts, 49% calls, so obviously slightly in the put favor, but we did still see a lot of calls being opened across the board. Where were some of the trades that I thought were interesting? The first one is, of course, the Russell 2000 continues to get way more puts than calls. Have a look at the difference in numbers here. The S&P 500 was putting in 1.5 million more overall puts, so you can get a lot more puts there that's going on. And Tesla was actually even on both puts and calls, which is unusual. Usually, as we see, there are usually a lot more calls than the put side. Heaps and heaps of unusual activity. Solar was the most beaten down market. Enphase got absolutely obliterated through the session, gave up its low. And the solar market is just in a suffering period of time. Let's move over to the charts now together and have a look at the VVIX. The volatility of the volatility was rising. And of course, this is something we're looking at. This week, you'll want to look at this. You'll want to look at the volatility in the bonds market. And of course, you'll want to be marking out things such as 25 VIX plus, because if that happens, usually we've seen a capitulation low or we're getting close to it. So yeah, the VIX was higher, the volatility of the volatility is higher, and the MOVE index remains incredibly elevated. It looks like they're back in town. US 10-year did drop from the highs after we've got now concerns about the market completely, and we have no change of trend on any of the long yields. Obviously, 2-year lost the most. 2 days of selling here on the 2-year. We went from 5.25 to 5% as effectively concerns about the whole economy is starting to come through. Treasuries are just seeing so much volume. Have a look at this volume. It's a new record down here on the lows in the previous session, and we continue to remain elevated. Someone is buying, someone is selling, but we have no turn event. And of course, we'll be looking very closely at market highs such as 88.35 in the future to kind of define that we may have a low in treasuries. At this stage, the sellers are still in command and it can go lower. Never bet against what is possible there unless you have a replicatable system with risk parameters. Let's move over to copper. Nothing good. It doesn't look good. It doesn't look like it's breaking high. The trend is still down and it's still putting pressure on this huge demand zone. We'll move over to equal weighted market. New low, not so good. Obviously coming into these lows here. Marks a good point for the bears to be confident in what they're seeing. We saw the Fed basically take away a bunch of injection from the markets. You can see here a huge move in the liquidity curves for both the US and the world, which are these two lines here. And that kind of was, similar to what happened with the market with 4 days off and sell. More on the key levels of that very, very soon. Dow Jones Transportation Average Index took a new low last week, and then the rest of the market followed so far. If this remains low, that is bad. We can mark out some highs in the future that we'll want to be focused on very cleanly for a proper recovery. But yeah, Dow Jones Transportation Average is bad and home builders are even worse. And this is telling you there's something wrong. Remember, home builders led us out of the problem last time. June was their low. October was their recovery low, higher low, and everything was looking pretty good. This time around, there is nothing to tell us just yet that home builders have fully recovered or are showing recovery. So could it be some giant double top? Are we seeing signs of problems? I would say yes. And there are a couple of things that you can point through here. Things like the trend lines, they're dead, they're gone. Look at that weekly, it was horrible. And then of course this week turned out to be even worse. Volume is high, home builders are in trouble there. Let's move over to the US dollar, still in distribution mode, at least that's what we're guessing. We are neutral on the dollar at this stage. I don't know whether it's accumulation is going up or distribution is going down. What I do know is this is an incredibly important level. If you had to say, what do you guess? My guess is the dollar will fall from this level. And of course, it will continue to be one of those points where we're looking for a wyckoff at this point in the dollar index, and more to that to come. What about gold? Really strong move from gold last week. Incredible week-on-week action here from the short squeeze. Someone's massively trapped down here in shorts, and they're getting leveraged out. We did hit a high, so of course, this is a resistance. I would say that we expect some type of pullback into move, but it looks like it's in a multi-month potential move here for gold. And we've seen some of the statistics when trapped shorts get in, it can be a pretty good turn event for markets. Gold on the stocks, well, there are some profit takers here. Why wouldn't you? What a great resistance high or supply high. And of course, a critical zone for gold. We move through here. It's going to be really big for gold stocks. So be on the lookout here and make sure to set alerts above these highs. It's going to be an important point. US oil is really interesting. We have low market heads kind of like looking at those levels, but this is basically an ascending channel at this point. So you can see the series of higher highs and the series of higher lows. If they